Hello, everyone, and welcome. We will allow a few more moments for everyone to join, and we will begin shortly. Hello, everyone, and welcome. Thank you for joining us today. I see we have a nice group of folks here, some familiar faces, some new guests. Very excited for this one. So if you're not familiar, my name is Alex Favosovich. I am the head of fraud risk here at Unit21. I am a fraud prevention practitioner for the past 16 years. Started in fraud operation, then fraud analytics, managing fraud teams, designing fraud strategy programs. I've been with Unit21 for almost 4 years now, leading the fraud and risk practice here. And my co-host for today is Nikki Willie, our senior sales engineer. Nikki, would you like to say a few words about yourself?
Yeah, absolutely. So I'm going to be here as a part of showcasing the demonstration and how Unit 21 can help provide value, especially with the changing regulations. My background is in technology and how technologies can help financial institutions solve their business problems.
Thank you so much, Nikki.
Yeah.
It is great to have you here with me today. So today's webinar is Navigating NACHA's 2026 rule changes with Unit21. In this webinar, we will talk about the new NACHA requirements for expanding fraud monitoring across the network and how it might impact your organization, whether you on RDFI and ODFI, TPS, TPSP, and showcase how different products and features that Unit21 already offers today for risk and compliance team can help you address those changes in an operational way. Before we get started, a few housekeeping items. So this session is being recorded and will be shared with the audience after the webinar is finished. Nikki and myself will hold the live Q&A at the end of the webinar. So if you have any question for us, please use the Q&A button on the right-hand side of the screen. If you are, for some reason, experiencing any technical difficulties, please scroll all the way down to the FAQ section. There is a lot of helpful resources for you to mitigate those challenges. So let's get started, and we will kick off with some poll questions. So please navigate to the polls tab on the right-hand side of the screen. And we have two questions for you that we will absolutely love if you can answer. So what is your biggest concern regarding the 2026 NACHA requirements? And how confident are you that your organization knows how to be, let's call it, NACHA compliant by the 2026 deadlines? I will allow a few moments for folks to submit their answers. All right, we have some answers trickling in. So for the top question, how confident are you that your organization knows how to be NACHA compliant by the 2026 deadlines? 65%, the majority says somewhat confident, which is great. And for the second one, it's a much closer race. So what is your biggest concern regarding the new requirements? Currently, 37% of you think that fraud detection and prevention capabilities is top of mind, and not far behind with 27% is the compliance readiness. So thank you so much for responding. We will get back to those answers a bit later during the webinar. All right, for the fun part. So please stay tuned all the way to the end and learn how you can win a very cool Fraud Fighters t-shirt. And now let's get to what really brought us here today. So what is changing in 2026, and what are those changes? How they will impact you? And I think, if we look at those upcoming changes, they are a direct continuation of the risk management framework that was introduced by NACHA back in 2022. And I want you to remember two dates and two rules. So we have phase one, which will be uh, implemented starting March 20th, 2026, and we have phase two, which will be implemented starting June 19th of 2026. And then we have two, let's call it two rules. We have the fraud monitoring rules, which are applicable for all non-consumer originators, TPS and TPSPs. And we have the ACH credit monitoring rules, which are applicable for the RDFIs. So for phase one, March 20th, 2026, all non-consumer originators, so basically any entity that originates ACH payments that is not a consumer, and any third-party service providers or any third-party senders with the annual ACH origination volume of 6 million or more in 2023. And for the ACH credit monitoring, if you are an RDFI with an annual ACH receipt volume of 10 million or more back in 2023. So all those financial institutions must implement a risk-based procedures to identify entries initiated due to fraud or false pretense. There is also two new standardized company entry descriptions. So basically, any payment that is a payroll or an online purchase will now be classified as payroll and purchase in capital letters. So it will be easier for you to monitor those. For the second phase, which is happening later that year in June, it's basically the same, but it's for all of the rest of financial institutions. So for the fraud monitoring rules, it applies to all the non-consumer originators, TPSP and TPSs, regardless of your ACH volume in 2023. And for the ACH credit monitoring, it applies to all of the RDFIs regarding to the annual volume. Now, I think, realistically, me as a practitioner, I think that once those rules are implemented, it's not like we are going to completely stop, ACH credit nor ACH debit fraud. It will not go away. But I look at those set of requirements, those set of rules as, just the good folks at NACHA really trying to develop a framework for us on how to monitor, mitigate, and ideally target where fraudsters are abusing the network. And I think if you will take one thing away from this webinar is that doing nothing is not an option anymore. And I'm sure that most of you are already monitoring those ACH payments. I know that folks on the AML BSA side looking closely on any inbound and outbound activity and already have those ACH payments sometimes reported as part of their BSA program and including them in the SAR filing. So now more of those monitoring capabilities are expected on the fraud side of things, on which we will elaborate right now. So key changes, let's call it based on roles. For the RDFI credit monitoring, so the natural language is establish and implement risk-based procedure to identify credit entries initiated due to fraud or false pretense. And when I read this, I think that risk assessment is the key to success here. So basically, what NACHA telling us is that you can no longer go and say, "Hey, I have no risk," right? There's no risk associated with the accounts that are receiving ACH payment at my institution. And you can no longer say, "Hey, everyone have the same risk." So all of my bank accounts that I have are, we are treating them as the same risk. So if you don't have an internal risk assessment, I think it's a great way for you to start thinking about how you will implement those. And then based on the different risk assessments that you do, and you can say, hey, this account might be more risky, or those sets of account might be less risky. You can start creating sets of rules to monitor those accounts accordingly to your risk appetite. On the ODFI side of things, so natural languages to establish and implement risk-based procedures to identify uh, authorized or transmission entry initiated due to fraud, and also annually review those process and procedures. So again, basically NACHA telling us, hey, doing nothing, especially on the ODFI side of things, is no longer acceptable. And you need to start monitor how those originations are happening and being able to track, hey, and say, this is out of pattern, this is doesn't look like it's normal activity for this account. Maybe this origination is happening due to fraud. Now, what actually NACHA expects? And I'm not here to represent NACHA in any way, shape, or form. At the end of the day, I'm a vendor in the space. But I do encourage you to visit nacha.org new rules to learn directly from the source. However, I will try to share some examples that might work for you. And I think the reason that the NACHA language is so general is because they are fully aware and they understand that there are a lot of different financial institutions on the network. From the biggest banks to the smallest credit unions to the TPS and TPSPs, different ACH volumes, different risk tolerance, different risk appetite, different approach to how fraud and money laundering is monitored in different financial institutions. And that's why there is no set of like requirements that say, hey, here's a guideline for you to monitor inbound, outbound ACHs. So they create a very general language for us to try and learn to understand. But what Nick and myself will try to do today is to give you some examples of what you might start thinking about in the very near future. So I think, first of all, uh, if you're an RDFI, you can start using the R17 code. So as an RDFI, you can return any item for any reason. And basically now NACHA encourage you to use the R17 code for that practice. Also remember that as an ODFI, you can reach out to the RDFI and request the funds back in any time using the R06. As an RDFIs, in many times it's fairly difficult to understand the actual circumstances under which a credit entry was originated. So here are some examples that you might start want to implementing in your financial institution. So first is the entry codes. So the standard entry code does not align with the type of the receiving account, right? Name mismatches, very big indicator for payroll fraud. So for example, if you have the name of the account holder and the name of the payee doesn't match, this is a big risk and big red flag. High dollar transaction for a typical receiving account. If you have let's say an account that belongs, you did your KYC, you know that this account belongs to a first grade elementary school teacher, and suddenly they make deposits of hundreds of thousands of dollars via ACH. This is probably a big red flag. You need to understand, does it make sense for this type of account to receive that type of money? And ask yourself whether this person is a money mule and they don't know they're a money mule, or this person is a completely compromised identity and then there's some failure on your KYC side of things. But basically being able to say this account not supposed to have those type of activities. And then obviously, new account fraud. So what do we expect from a newly established account, whether it's for 7 days, first 30 days, first 90 days, whatever your new account policy is. And then on the other side of things, dormant policy. So what is dormant account? How do you define dormancy period, whether it's maybe 3 months, 6 months, 9 months? Again, depends on your risk appetite. And what is the reactivation account, reactivation event? So if we had an account that had no activity for 6 months, and then suddenly we have a $50,000 ACH deposit in it, that's probably a red flag, something that you want to investigate, reach out to the customer, reach out to the ODFI and say, hey, what is happening here? We're trying to understand what's going on. Also, you are encouraged as RDFIs to contact ODFIs using the NACHA risk management portal. So basically you have their list of contact information that you can reach out to the ODFIs and try to clarify the reason for the origination of the ACH transaction.
There's Alex, there's a couple of questions that this might be a good time to
Let,
address on that past
let,
slide. Yeah,
let's do it.
yeah.
All
So
right.
one of the questions was, can you please define TPS and TPSPs, which I think is, yeah, those are the two questions.
Yeah, absolutely. So TPSs and TPSPs are, you can say, for example, a company that is a payroll provider, right? They send payrolls to employees of other companies, so they originating ACH transactions. Or, for example, a fintech company that is on the front end side, it's an app, it's maybe a mobile bank, but on the back end, it's a company that has a partner bank that they use the routing number of the partner bank. So basically, any entity that originates ACH payments, is not necessarily, a banking entity. Let's see what else we have here.
Yeah, why is monitoring limited to ACH credits versus debits is another one.
Well, at the end of the day, that's what NACHA is facilitating. NACHA facilitating ACH payments. So you either or. You can have ACH credits that are coming into your accounts, or originating ACH debits that basically have funds leaving your accounts. In many cases, you can have both. You can have credit entries and also debit transaction that they in the account. So they want to make sure that both sides of the transaction are monitored. So you do the minimum requirements as an originator, but you also do the monitoring as the receiver.
And then there is, will this apply to our business customers that initiate ACHs with the change of the SEC code, if I understood that correctly?
So any originator that is not a consumer is impacted, and depends on their volume in 2023. They will be impacted either from March or from June. So if they initiate, ACHs more than $6 million in 2023, then the monitoring need to start happening in March. If they are smaller than that, then it can wait until June.
Yeah, I think before we move forward again, if we could just clarify maybe what the acronym is, the TPS and the T, that might be good.
Oh, absolutely. So
Yeah.
a TPSP is a third-party service provider, and a TPS is a third-party sender. That's the acronyms. All right, so we are ready to move forward. Okay,
Yeah.
so you might be asking yourself, Okay, what it has to do with Unit 21. So for those of you who are not familiar with our company or what Unit 21 is, we are basically a risk and compliance operational infrastructure system. And on the screen right now, you see how we ingest, analyze, detect, and act on risk signals all in one platform. The foundation of Unit21 starts with data ingestion. So we are very data agnostic, and we know that financial institutions have many different data types, whether it's the transactional data, your user data, third-party data that you'll get from other providers, device intelligence, behavior signals, the KYC and KYB data that you get from your vendors, and then non-transactional activities such as login sessions, maybe a website or app actions, PII changes, all of that. All those different data types and elements can be ingested in Unit21 and then utilized in our very powerful rule engine to deploy rules and strategy that makes sense for you. And basically, Unit21 makes it very simple to bring all that data in, whether through our API integrations or via our flat file integrations. At the center of it all, we have the what we call risk and compliance infrastructure. So we have AI agents for automation and alert triaging. We have a case management solution where you can conduct all of the investigation. We have device intelligence for behavior and fraud signals, customer risk rating to measure entity level risk, watch list screening for sanctions and PEP and all the good stuff that we are required to monitor. And we have the fraud consortium, which is a network of shared intelligence. The output of the work in Unit21 is usually alerts and cases that the agents are working, and then stuff like direct filing with the regulator, data analysis on our dashboards, and taking automatic actions on your backend via webhooks that you connect to Unit21. So how
There are
does
there are a couple more questions that might be a good time now too, before
let's
we
do it?
jump into this part. Yeah, sorry, didn't mean to cut you off there, but
All
does
good.
does this also apply to wires?
No, those rules are not applicable to wires. They are for ACH transactions only.
Okay. And then another one was, what advice do you have to contact the ODFIs? Many large ODFIs, it is nearly impossible to locate the correct department or person that can assist.
Um, as a practitioner, I will tell you that if you go to the NACHA's risk management portal and you get the contact information of the ODFI, but hey, like you said, you cannot reach out those people. They don't answer. I would say use your rights as an RDFI to send the funds back. If you unclear, if you cannot justify and say, I believe that this origination is legitimate, you can just send the money back. Use the R17 code. You are encouraged to do that. Um, I think if at the end of the day, if the origination is justified, um, then it will come in a different way. It will come as, your customer will reach out. He will ask you, hey, why my ACH was returned? You can clarify that with the customer. The customer then can reach out to the ODFI, to the other bank where the ACH was originated, and help to smooth the process. But don't be scared to send those transactions back. I mean, it's better. I think it's better if you have a lot of doubt in, hey, this might be fraud or this might be originated under false pretense. I would say send it back because we all know that we can only send back full amounts. So partial amounts are not applicable for that. It's very challenging. So yeah, just review the transaction, and if you have a doubt, just send it back.
Thanks, Alex.
All right, of course. So, how Unit 21 can help you? So we are uniquely positioned to help every side of financial institutions on the network, whether you are, an ODFI or RDFI, simply because the way we design our rule engine is actually meets exactly those criteria, and you will see it better once Nikki starts the demo. But basically, we have a rule-based logic. So either for sender entities or receiver entities, so you can act both as ODFI and RDFI within the same set of rules or separate rules. We have pre-built templates. So whether it's, you want to monitor micro deposits, or maybe you want to monitor a suspicious mule activity, maybe you have an account takeover policy that you want to deploy with regards to ACH fraud. We have pre-built templates for that. Custom thresholds. So what Nikki will show you today will have certain thresholds that might resonate with you or might not. You must say, hey, this amount is way too high for me, or maybe, hey, this is way too low for me. This will generate thousands of alerts. It's very flexible. You can change the thresholds. You can change the amount. It's very easy to do. It takes seconds to deploy. From there, how do you actually operationally alert on the activity and then work those cases, work those alerts? Very easy to do. Also very easy to put AI agents on top of that to help you triage some of the work, to help you to review the less risky work by an AI agent and then escalate the high risk alerts to a human agent. So yeah, basically it's very easy to scale with Unit21, and we serve tiny credit unions and huge regional banks, and probably the biggest fintechs in the US. So it's really not a problem. So being, let's call it NACHA ready with Unit21, basically the capabilities are monitoring for the RDFIs, is monitoring inbound activities, making sure that you know how to monitor influx of micro deposits, monitoring potential mule behavior. So when you have a customer who basically treats your account as a pipe and just bringing money in, takes money out, brings money in, takes money out, then fuzzy logics on how to detect payroll and refund and purchase, online purchase fraud. For the ODFIs and the TPS, the TPSPs, monitor outbound activities, also using our CRR capabilities, so you can deploy a customer risk rating model and then apply the results of this model within rules. And like I said earlier, I think risk management, healthy risk management here is the key to success, and being able to showcase, hey, I have a bucket of customers who I consider high risk, then a bucket that I consider medium risk and low risk, and I treat them differently with different sets of rules. So that as well. And outside of that, making sure that you can monitor both the payroll origination and the online purchase origination, which, by the way, you don't, as an ODFI, you don't have to do in real time. This can be done, based on the batches that you send out. So it can be done like once a day or whatever it is. As an ODFI, you don't have to do it in real time at the time of the origination, being able to detect the fraud, but definitely look at those batches and understand based on the historic behavior whether or not we have some originations that might be due to fraud or false pretense. And before we move to the demo, I actually want to talk about our fraud consortium and why it is a great tool for you to fight ACH fraud. So if you're not familiar with the offering, about 2 years ago, we introduced the first fraud consortium, which includes banks, credit unions, and fintech companies. Today, we have more than 80 financial institutions with a coverage of 30% of the US adult population. And basically, what this fraud consortium does, it's a network of global data sharing. So this offering is free. It doesn't cost money to be a member of the consortium, but it's a gift to get models. So if you want to become a member of the consortium, you are expected to share information about your end users. With that in mind, we also have a patent that uh, talks about how we hash the data. So actually, none of the sensitive PII never leaves your financial institution. It's being hashed and then in a hashed form sent to the consortium. What you can get as a member of the consortium is the insight to whether or not the account that you are interacting with, whether it's your own account or account that, let's say, you are now wearing your RDFI hat, so you have an inbound payment from an account you've never seen before, you can query the consortium and see if that account has been involved in ACH fraud before. Has this account been a victim of an account takeover before? And then better understand as an RDFI, okay, maybe the origination of that ACH is actually due to fraud or false pretense. And last slide before we move to the demo part of the webinar is, the risk of non-compliance. I mean, the obvious is, regulatory fine and enforcement. I mean, nobody wants to lose the right to use ACH transactions. Increase in fraud. At the end of the day, none of us here wants to facilitate fraud. And what NACHA is trying to do is really give us a framework on how to monitor and detect those different points where fraudsters might be using the network. And obviously, reputational and commercial damage. If you have customers who suffer account takeovers, and then funds leaving their accounts via ACH transactions, it's very hard to rebuild that trust and rebuild the reputation that you already have established with your good customers. So definitely worth the effort for you to start monitoring those activities. But I think it's time for me to stop talking and move to the fun part of this webinar, which is Nikki's show and how she will show us Unit21 can help you monitor some of those activities. So I will stop sharing my screen, and Nikki, you're more than welcome to share yours.
Great. Thanks, Alex. All right. So as we walk through this high-level demo of how Unit 21 is really built to help with each role in this process with these changing regulations, um, I want to first start off with some of the things and points that Alex made earlier is that um, we really do have a flexible data model that was designed to take into account the flexibility for building rules and managing your programs and fraud and AML from the beginning. So, a lot of these new regulations are not something that we couldn't manage before. The way that our product is designed, it really is there to look at all aspects of the transaction, any entities involved in those transactions, and you can really specify and create the thresholds needed for your institution. It's easily customizable. So we've got some out of the box templates that you can use to get started, but really you'll want to be able to customize them for your business, your specific requirements to meet these regulations, as well as your risk appetites. Alex mentioned earlier, each one you may have different risk thresholds. Those are things that are easy to update and change within Unit 21 without needing to know how to code. And then we do have tools available to help monitor the performance of those rules once they're in production to help provide recommendations on how to continue and improve them. So if you're not familiar with Unit 21, what you're looking at now is the rules engine, and this is really the heart of the transaction monitoring part of the Unit 21 platform. You can easily see all of the rules that are currently in production, as well as any rules that are currently being tested, whether that's validation testing, so testing against historical sets of data for your above the line or below the line testing, or your shadow mode testing, where you can actually include things to be tested against live incoming transactions. You can view all of those details here. Specifically, we can even see some rules that are designed for these new types of regulations. So here we can see, for example, looking at a high dollar or count of payroll for the RDFIs, so on the receiving end. Anytime you open up a rule, what you'll be presented with is the details of the rule itself, including the rule content. So here you can see how this rule was designed, including what exactly this rule is looking for. It's looking for the account tenure. So the sender or the receiver, how long have they been registered customers? So this is saying anything newer than 30 days we want to take a look at. And then you can look at either, any sort of combination of things here where we're looking at their new account and the total ACH credit sum is greater than 10,000 or they have more than two ACH credits. So you can design these rules to really hone in on the types of suspicious activity and your risk threshold. You can also see where any of these maybe have triggered an alert so far. So you can actually see how these rules are performing and what type of ACH transactions they're capturing. Um, this is something where these are generating alerts and they're working through the workflow. So, what your analyst would be able to see for any of these are first and foremost, why did this particular transaction flag? So, you can actually see that this account was pretty new and you can actually then see you know, what conditions were met. So they had 17 ACH credit counts. But then you can also see the details for everything around the transaction and the entities, including one of the questions I saw in the chat was, can you tell me what the CRR is? And that's going to be the customer risk rating. So, a lot of times our customers are creating a risk matrix to understand what characteristics of their entities, the senders, receivers, really indicate that these people are high risk entities to do business with or low risk. And so you can easily see that risk score as well. As you start analyzing these rules, you can also configure them very easily so that they meet your thresholds. So this was something that Alex talked to earlier was not everybody has the same risk thresholds, not everybody has the same risk appetite. So what exactly does that look like for you? For example, here maybe we want to change the credit totals, right? So we maybe want to look at some for newer customers, we want to look at a lower threshold. Then for customers that have been around longer, we want to look at a higher threshold. So you can create variations based on the different segments that you're working with, as well as the different thresholds. You can also start adding additional pieces that you may want to consider when you're looking at these rules. So looking at, for example, the risk score. Maybe we want to only flag those items who have a risk score that's high. So you can start keeping that into consideration as well, because maybe the threshold for high risk entities is going to be higher than those that are deemed lower risk. So that's how you can start customizing the rules um, very easily without needing to know how to code. As you're starting to add these conditions, for example, here I want to say that risk score equals high, for example, or the risk score is greater than or equal to 75. So this is looking at the number which translates into a high, medium, or low. As you start creating those edits and making updates to those rules and those thresholds, you can start testing these and making sure that they work and are tracking the types of activity that you expect. You can also specify how often these are going to be executed. So, whether it's once a day, 3 times a day, whatever that frequency looks like, may depend on how often you're seeing this type of transaction come in. So, as you validate it, this allows you to just continually test it, make sure it is tracking exactly those activity that you want it to. What exactly does the alerts look like? Here we can see we have none. So maybe I need to continue to refine this. This is here to really allow you to really reduce the false positives and really track the activity that you need to track. In addition, once these are in production, you can start tracking the performance. And Unit 21's AI agent will actually provide recommendations on how to better improve the rules. So, for example, here I've got some muling rule that says, hey, Unit 21 has identified some areas of improvement for muling. One of the questions earlier is how do we define muling and what are ways to identify it? And so typically, you know, Alex mentioned earlier, it's where someone gets some money in and then it is going right out. So it's basically a placeholder account for receiving money and then sending it out to someone else. So here we can see for this particular money muling rule, um, the current rule is looking at how many unique people, counterparties are involved in transactions within a 1 day span, a 3 day span, a 5 day span, a week span. And so, if you have a lot of counterparties, that might be indicative that you are sending out a lot of money that you're ingesting to multiple people. And so, muling that money from your account to other recipients. But then you can see the AI recommendations will provide you details like, hey, you might want to actually exclude some business activity. So there's some types of thresholds that you can include within the rule itself to better perform. And these recommendations are going to be based on all of the false positives that you have dispositioned as a part of the case management, and the true positives. So, looking at just patterns of how you have looked at this rule with your existing transactions will provide recommendations on how to continually improve these rules over time to really save the time of your analysts that are having to review these. And then, like Alex mentioned at the end, we have a consortium that allows you to see details on where other financial institutions may have blocked these people from doing business, these people in businesses. You can actually see that within an alert. So, inside of those alerts that are generated, coming in and viewing, for example, um, whether or not people have been tracked or stopped for, fraud, whether it's ACH fraud or other types of fraud from other people outside of even your line of business. So maybe in this case, Thomas Hughes has been flagged by a crypto company and you're not a crypto company. This gives you outside signals to indicate the risk that Thomas can pose to your business as well. And then you can also create rules to be flagged by particular consortium fraud alerts as well. So if you have any existing customers, existing entities, receivers, or originators, they could be flagged by these rules that is looking for anybody who is in an ACH transaction who has been blocked by our consortium for fraud. So you can be alerted and be proactive instead of waiting for actual fraud within your particular institution. And Unit 21 is really designed to continue to grow as regulations change, right? So this is just one phase of changes. Changes happen continuously. Unit 21 is really set up with that flexible data model with the ability to customize the thresholds on your own to quickly react to um, changing regulations over time. So that's a very brief introduction um, on how Unit 21 is positioned to help with you being able to monitor ACH credits and debits from um, either side of the ACH, whether you're the RDFI, whether you're the ODFI, as well as if you're a TSP. You can create the rules that are specific to your organization, customize the thresholds, and easily monitor those transactions and track how well those rules are performing and monitor and make those changes over time.
All right, thank you so much, Nikki. That was a great demo, and I hope it help our audience to understand a little bit better of what you potentially might uh, start implementing as your monitoring strategies. Let's spend the next couple of minutes answering some more questions in the
Absolutely.
Q&A section that we have here. So let's see. Ned is asking us, just to clarify, we will be required to make sure the name of the ACH credits match the name on the account, right? Well, NACHA doesn't tell us that we are required to do so. What they're asking us to do, according to their language, is to make sure that the ACH credit that you receive wasn't originated due to fraud or false pretense. So let's take an easy example of payroll, right? If you have an account, and usually we expect an account, let's say you have one consumer on the account. Usually we expect that one consumer to receive two payroll transactions every month, right? Most of us getting paid every 2 weeks, right? So we get two payroll transactions every month. If we have six payroll transactions, right? That's probably something worth looking at. And then when you look at it, if you see that there is more than one name on the payee side of things, so the payee doesn't match the name of the account holder, this is probably fraud. This is probably payroll fraud, whether they took over someone else's account or whatever the case might be. They're just muling money. Again, there's no specific requirements that, hey, you have to monitor name mismatches. Let's see what's next. Is there any overlap in the new NACHA rules in the ISO 222 compliance requirements? There is overlap. I would say, it's probably because the ISO standard is very detailed, and if you're already using the NACHA's guide today on how to translate the ISO messages to the ACHs, probably the new requirements will sit on top of it. Tim is asking, can TPSPs and TPS access the NACHA risk management portal? I believe so, yes. But I would advise you to go on the NACHA website. I know that they have a dedicated phone line that you can get support. So I would just advise you to call them and ask. If you don't know how to access them, I think they can guide you how you can access this portal. What's the definition of a mule account and how do you identify them in a high level? So a mule account is usually account that using the account as a pipe to move money in from one destination to another. If on a high level, if you think about this, when we are getting paid, let's say we are getting our payroll, that payroll is being utilized for very specific things, right? So we either pay our mortgage or our rent, we maybe have some car payments, we buy our groceries with that money, we pay off our credit cards. There's a let's call it standard consumer activity that you will expect after a payroll hits the account, right? But if a payroll hits an account and then within 24 hours or 48 hours, 80% of it or 90% of it moves out, or maybe it's not a payroll, maybe it's just, you got a $20,000 of, ACH credit that hit the account and it doesn't have the payroll code on it, but it's being moved very fast to a different place. That is probably a mule activity. Now, sometimes those mule accounts are operated either by compromised or synthetic identities. Sometimes they're operated by legitimate identities who don't even know that they're mules and they're just being pretty much abused themselves and somebody telling them to do certain things in order to move the money from one place to another. So a mule account on a very high level is account that doesn't showcase expected behavior based on the account type. Let's call it that way. Let's see, does the bank have a responsibility to review exactly what an originator is doing for a fraud review? No, they don't. Again, the natural language doesn't really give us, what is exactly we're supposed to do. So it's pretty much up to the way how do you do your internal risk management and how you can showcase that you can detect originations that created due to fraud or false pretense. What are business email compromise anomalies? Where I would say the biggest red flag is when you have the same destination account, the same destination company comes with a new bank account number. So now we are sending money out to the same destination, but it comes under a new account. That's probably a big red flag. Or in general, you have a same recurring payment that is happening, let's say once a month, once a corner, but now it's going to a new destination. This is also a red flag. Kurt asking any privacy concerns or protections with respect to the consortium offering. So in terms of privacy, this is why we created our hashing mechanism and also went and actually put a patent on it. The idea is that you don't want to take your PII and send it somewhere else, right? Because obviously you don't want to expose the information of your end user to a potential data breach of a third party. So whenever you work with our consortium product, in order not to expose any PII, everything is being hashed on your side, and then the hashed information is being transferred to the consortium.
I saw one question about, does Unit 21 ingest the institution's existing customer risk rating, or do we calculate our own? And the answer is either. We have our own risk rating module so that you can customize and configure your own risk rating that can be incorporated. Or if you are calculating that on your own and you want to send it along with the entity information, we can use that as a part of the rules as well. So that customizable data ingestion, flexible data model really allows for either or.
Yes, absolutely. So you can either send it as a custom data field or use our customer risk rating feature to build your own model within Unit 21. Both things are working. So for those of you who stick with us all the way to the end and would like to book a 30 minutes strategy session with me, uh, feel free to scan the QR code that you see on the screen right now. For every person who will take the call with me, we will be more than happy to send you a very cool Catch Fraud Not Feelings t-shirt that we have. And outside of that, I think this is all we have for you for today. So again, thank you so much for joining us today. Nikki, thank you so much for the demo. I think it was great and very eye-opening on how easy it is to deploy those rules and strategies. And I hope that we will see you next time as well. So thank you so much and have a great day.